Selamat datang. Imagine running a business where every invoice you issue is instantly logged with the tax authority. No more mountain of paperwork or worries about lost receipts. That's exactly what e-invoicing promises for Malaysian businesses. It's a game changer introduced by LHDN, Inland Revenue Board of Malaysia, to modernize the invoicing process, reduce paperwork, and boost efficiency. In this video, we'll demystify e-invoicing in Malaysia, explaining what it is, how the rollout is happening, how you can comply, and who doesn't need to worry about it. We'll break everything down with simple examples, so whether you're a small business owner at a pasar malam or part of a corporate finance team, you'll find this friendly, comprehensive guide helpful. Now let's dive in. What is e-invoicing? Malaysian context. E-invoicing means sending invoices electronically in a format that a computer system, like LHDN system, can read and verify automatically. It's not just emailing a PDF copy of an invoice. In Malaysia, e-invoices are generated in a structured digital format, such as XML, then validated through LHDN's MyInvois portal before reaching the customer. Think of it like this. Traditional invoicing is akin to sending a letter by Pos Malaysia. It's manual, and you're not sure when or if it's delivered. E-invoicing, on the other hand, is like sending a WhatsApp message. It's instant, paperless, and you get a blue tick of validation from LHDN. Every e-invoice will carry a unique QR code or validation code from LHDN once approved, almost like an official digital stamp or CHOP that proves, yes, LHDN has recorded this invoice. This increases transparency, accuracy, and tax compliance across the board. In short, e-invoicing in Malaysia is the government's way of making invoicing fully digital and trustworthy, so both businesses and tax authorities have a synchronized record of every transaction. Phased rollout by LHDN, who needs to comply and when? Now you might be wondering, do I need to start e-invoicing right away? Don't worry, Malaysia is rolling this out in phases. The timeline is staggered based on business size, annual turnover, to give everyone time to adapt. Here's how the phased rollout breaks down. Phase 1, starting 1st August 2024. Largest companies. Those with annual turnover above 100 million ringgit. These big players go first. Phase 2, starting 1st January 2025. Medium to large companies with turnover between 25 million ringgit and 100 million ringgit. By early 2025, thousands of mid-sized businesses join in. Phase 3, starting 1st July 2025. Now the majority of businesses are on board. All companies with over 500,000 ringgit in annual revenue must comply from this date. This net catches a lot of SMEs. If your business is doing above 500,000 ringgit a year, mid-2025 is your go-live for e-invoicing. Phase 4, starting 1st January 2026. Finally, the smaller SMEs are included. Businesses with turnover between 150,000 ringgit and 500,000 ringgit need to start e-invoicing by 2026. This phase was initially sooner, but the government gave extra time to small businesses to prepare. After these phases, essentially almost all businesses will be using e-invoicing by 2026. Notably, this phased approach gives smaller enterprises breathing room, an opportunity to see how bigger companies handle it first, learn, and get systems in place. It's like gradually merging onto a highway. The big trucks go first, then the cars, then the motorcycles. Each group gets a lane when they're ready. What about micro businesses and tiny traders? The good news is that very small businesses are exempt from the mandate for now. The government announced that businesses with annual sales below 150,000 ringgit do not need to issue e-invoices. This exemption benefits over 700,000 small traders. Think local hawkers, market stall operators, tiny kedai runsit, who can continue with their usual invoicing for the time being. So if you're a really small enterprise, you won't be forced into this digital system just yet. How to become e-invoicing compliant, methods and providers. So, if your business falls into one of those phases, how do you actually comply with e-invoicing? There are two main ways. 1. MyInvois Portal, manual method. LHDN provides a free portal called MyInvois for businesses to use. You can log into the MyInvois web portal using your tax ID credentials and manually create or upload e-invoices one by one. The portal will then send each invoice to LHDN for validation automatically. This option is great for micro and small businesses or anyone who issues only a few invoices monthly. It's like using an online banking website. You fill in the details on screen. The portal is designed especially to help MSMEs digitalize their invoices without needing expensive software. 2. Direct API integration, automated method. For larger businesses or those with high invoice volumes, manual entry would be tedious. Instead, you can connect your accounting software or ERP system directly to LHDN's e-invoice system via an API, application programming interface. In simple terms, your computer system talks to LHDN's system in the background. Every time you issue an invoice in your own software, it automatically sends the data to LHDN's MyInvoice system and returns the validation code QR. This is seamless and ideal for companies that want to embed e-invoicing into their existing workflow. Think of this like automation in a factory. Instead of manually delivering each invoice, like carrying packages to the post office, you have a direct conveyor belt to LHDN. Many medium and large companies will choose this route for efficiency. Whichever method you choose, the end result is the same. Your invoices get registered with LHDN. The MyInvois Portal versus API integration choice really depends on your business size and tech capability. And don't worry, you're not alone in this. There's an ecosystem of solution providers to help. Recognized solution providers. A number of software companies have stepped up to make e-invoicing easier. Some popular accounting software in Malaysia, for example, AutoCount and SQL Account, now offer built-in e-invoice features that let you prepare and submit invoices directly to LHDN in one click. They basically implement that API integration for you behind the scenes, so you can continue using a familiar interface. International providers are in the game too. For instance, BDO, a global tax tech company. There are also others like ClearTax, Bukku, and more offering compliant solutions. When choosing a provider, make sure they are LHDN compliant. Many advertise this clearly, and ideally integrated with MyInvois. LHDN's use of the global PEPL e-invoicing network means many international solutions can connect as well, so you have options. The bottom line is, getting compliant is not just a legal chore, it's an opportunity to upgrade your billing process. With the right tools, issuing an invoice can become as easy as hitting send on an app, with the confidence that LHDN is automatically in the loop. Briefly on exemptions and special cases. We mentioned earlier that businesses below 150,000 ringgit annual turnover are exempt from mandatory e-invoicing. That's the big exemption to know. It's aimed at micro-enterprises and hawkers, so they won't be overburdened by this new system. Beyond that, there are a few special cases and temporary relaxations worth noting, though we won't dive deep here. For example, when a phase kicks in, LHDN often provides a soft landing period, interim grace period, of about 6 months with no fines, where businesses can even issue consolidated e-invoices, a summarized invoice report, to adjust to the system. There are also rules about self-billed invoices and certain transactions that might be treated differently under the e-invoice framework. Don't worry if these terms sound unfamiliar. We'll cover exemptions and special scenarios in detail in a follow-up video. The key takeaway for now is, if you're a typical business above the micro threshold, plan to comply by your phase's deadline. If you're below the threshold or in a unique situation, you might have some leeway, but stay informed. Always double-check the latest guidelines because regulations can update. LHDN has been releasing updated e-invoice guidelines. By now, you should have a clearer picture of what e-invoicing is and how it's rolling out in Malaysia. From the concept of digitally validated invoices to the phased implementation by business size and the practical steps to get on board, Malaysia's e-invoicing initiative is well underway. It might sound a bit technical, but remember the analogy. It's like moving from sending paper letters to sending instant messages. A bit of effort to adjust, but ultimately faster, safer, and more efficient. Businesses that adapt early can streamline their operations and avoid last-minute scrambles. If you're an entrepreneur, accountant, or part of a finance team, now's the time to prepare for this digital shift and choose the compliance method that suits your needs. And if you're a tiny biz below the threshold, keep it on your radar for the future. But you can breathe easy for now. Thank you for watching. If you found this explainer helpful, please give it a thumbs up. And don't forget to subscribe to our channel for more Malaysian business, compliance, and finance insights. We have lots of valuable content on the way, including that deeper dive on e-invoicing exemptions. And we'd love for you to join our community. Hit that subscribe button and ring the notification bell so you won't miss out. Thanks again, and see you in the next video.